In today's video, we're going to go through the top 5 reasons why property can provide a solid foundation for your retirement. Do you get frustrated when you see your super balance ticking down because it's lost money in the share market again? Do you think about what that decline in your super balance is going to mean for your retirement schedule? Does it put it back by a year or two? And what about the standard of living that you might be living in retirement as a result of losing all of that money? What does that mean for you as well? It's very frustrating, I know. The share market has lost approximately 20% of its value this year and certainly shows no signs of recovery in the face of continuing uncertainty. Uncertainty like we've got China already coming out and saying that they will be reuniting Taiwan with the motherland. What's that going to mean for the situation in Asia? We've got Russia with their war against the Ukraine turning off the gas to Germany, and it's not even their European winter yet. So do you think that's going to lead to more uncertainty and unrest over there? I think it's going to. The default investment for most super funds is shares. And so most people's super fund balances suffer as the share market suffers. But did you know that if you like property like we do, you can form an important foundation for your super by starting your own self-managed super fund, which is designed to invest in investment grade property, as well as perhaps a mix of shares as well. We've certainly got nothing against shares. However, it may not be the right foundation for your super fund, let alone having all of your retirement savings in shares. So in today's video, once again, we're going through some of the reasons why we love having residential property as part of our super fund strategy. One of the first ones is that property is a really safe and secure investment, and it's a predictable market. That's been the case for over 100 years here in Australia. The second reason is that rental returns are growing strongly across the whole of Australia at the moment. So returns are increasing. I understand obviously that interest rates have gone up a little bit. So if you leverage your property, then you're paying a little bit higher interest rate cost. However, at the same time, rents are going up at the same time to be able to compensate you for that, which is fantastic. Now, at Liberty, for a superannuation fund, we recommend new investment grade property. And it being new, it means you're going to get a depreciation allowance that's going to give that particular super fund tax benefits that can be written off against other income. So that's another huge benefit of having property in your super fund. The other thing is that just like your owner-occupied property in your super fund could be capital gains free when at some stage you ever sell it, as long as you're holding that property across your retirement age. As long as you're holding that property into retirement, then any sale benefit could be completely capital gains free, which is a massive thing, not having to do any capital gains tax. The other thing, the fifth reason, is that shares in super cannot be leveraged. In other words, you're investing on a dollar for dollar basis. A dollar comes out of your super fund, a dollar goes into the shares. What you can do though with property in a super fund is you can leverage it. So that leverage means additional potential capital growth into the future. So that say a property is 500,000, you might choose to borrow 250,000 of that. So rather than putting in dollar for dollar, you're only putting in 50 cents for a dollar against that particular property. That can also have a huge long-term benefit. The other thing is, in relation to that leveraging your property in super, is that it can be easier to borrow, particularly maybe for self-employed people who may have challenges borrowing from the fussy banks that we have these days in terms of getting the sort of loan that they need. Borrowing in super, we have lenders that only look at the super fund. So they don't, because it's its own legal entity, of course. They don't look at you and what's happening personally. They want to obviously see that you're solid and that everything's okay for you financially, but they're not going to be as fussy with taking a look at the borrowing capacity of a super fund, as long as it's got obviously those rents coming in from the property, as well as the stipulated capital, the guaranteed contributions that are coming in each month. As long as they've got those coming in, they're happy. So if you're interested at all in perhaps exploring what an SMSF or a self-managed super fund could mean for you and your retirement funds in the future, given that it can obviously, a self-managed super fund can invest directly in investment grade property, then by all means reach out and we'd be happy to discuss any of the implications for you and the ins and outs of how we could structure that for you. So this is Michael signing out from Liberty Property Strategies, your complete investment property solution providers.